Welcome to the Almond Brief, brought to you by the team at Harris Wolf Almonds, your trusted source for the latest global almond market trends. Whether you're a grower or a buyer, we've got the insights that matter to you. The goal of this podcast is to deliver information in a clear, concise, and speedy manner. Don't forget to like and subscribe and hit that notification bell so you never miss an episode. If you have any questions or comments, drop them below. We love hearing from you. Without further delay, let's jump right in.
Welcome back to the Almond Brief, brought to you by Harris Wolf Almonds. I'm Chase Higginbotham, here again with Kevin Souza.
Chase, how you doing?
Pretty good, Kev. How you been?
I've been good. Thank you.
Very good. We touched on it a little bit on the last podcast. You were getting ready to head to Asia, go to INC. How was that?
It was good. It was a good trip. Ate a lot of good food and met with a lot of customers, had a lot of conversations. A lot of information came out, right smack dab in the middle of it. So it was very, very lively.
Yeah, you touched on that. While you were gone, we had the April position report come out. We had the USDA subjective estimate come out. Granted, where you were, that stuff came out at like 1 a.m, 2 a.m. So might have been asleep at the time, but you have had a chance to talk to the customers over there. Everybody was in one place and could kind of digest that information. So.
Yeah, absolutely.
You want to dive in? I think we'll start with the position report, run through those numbers, and then we can spend some more time talking about the estimate.
Perfect. Sounds good.
Sounds good. Looking at the crop receipts so far, we're at 2.69 billion. We say over and over this time of year, it kind of is what it is, 2.7. Not much going to change there.
All the conversation regarding receipts can be put to bed at this point. They've already been put to bed. We all know what it's going to be. So that's nothing new there.
Yeah, same old story. So
Same old story.
Nothing going to change. One thing that was a little bit of a shock, looking at sales for the month of April, 160.7 million. So seems a little low, but how does that stack up against industry expectation?
It was lower than industry expectation. I think the industry was expecting somewhere around 190 to 200, kind of similar to last year. But when you think about it, it's really not that shocking. The beginning of April was a strong month as far as sales went. But then as rumors of the independent estimates were going to come out, that kind of slowed things down. People wanted to see what that number was, and they did come out, and then another one came out, and then the month was almost to the end. Subjective was a couple weeks away. Both buyers and sellers kind of like, hey, let's just wait and see what those numbers are. Let's get all of our facts in front of us and then go from there. So that's why you saw a dip in sales for the most part, in my opinion. But now we have all the numbers.
Yeah, and that makes a little more sense considering this year the weight of the independent estimates and of course the subjective is a lot more important with the discontinuation of the objective estimate. So
That's just
now that kind of sets the numbers. That's the crop size we're going to be looking at. There isn't one more pending as it was in years past with the objective. So understandable. Taking a look at the shipments, 219.9 million total shipments. It's kind of right there with the average we like to see each month, but it is a little lower than we've seen the last few months.
Same thing. It was below the expectations, but it's not a bad shipping month. If you look at the numbers, if we can average 210 million pounds per month for the next few months until we get out of the 2025 crop, our carryout's still going to be right around 500 million. So we're still in a good spot as an industry. Shipments are still good. We're at a good spot as far as how much we've shipped and sold. So not too big of an issue.
Yeah, we are still a little behind overall on year-to-date shipments, 2.7% behind last year. But I mean, as you said, it's not hard to close that gap. And I mean, from what you're hearing from customers, your sense, it seems like there's plenty of demand to make that happen.
There is. The buying habits haven't changed. So everyone's still buying hand to mouth. So even though the shipments were off a little bit, that can also mean that there's going to be less inventory in other markets because it hasn't shipped yet. And with the demand still there, they're going to have to continue to buy and continue to ship. So I think we will see steady demand, steady shipments going forward. So pretty much not a red flag.
Okay, yeah. So just a kind of a little dip this month, but nothing to get alarmed about.
No.
And a lot of that was driven by the subjective, which I think we can get into now. Looking at the independent estimates, those were ranging from 2.64 billion all the way up to 2.72 billion pounds. All of them kind of roughly within that same ballpark. The subjective came out at 2.7 billion. So
2.7.
it's right there in the wheelhouse.
Just as well, you never know what to expect from these estimates. They could be crazy high, crazy low, anywhere in the middle, but the 2.7 came directly in the middle and what was
Yeah.
expected. No curveball there. Going back over at INC, the majority of the conversations that the whole industry had was what's the subjective going to be? What's the actual crop going to be? And what happens if it comes out at 2.8 or higher? What's going to happen to the market on both current crop and new crop? Or what happens if it comes out at 2.6 or lower? New crop's going to go crazy on pricing and whatnot. So it was all these hypothetical conversations, and then the number came out at 2.7, and I was like, oh, well, all right, we don't have to worry about that anymore because now it's just business as usual. Just keep it moving.
Yeah. So I think you mentioned at the conference, it was you guys were there 2 days before the estimate actually came out.
Correct. So yeah,
So you spent those 2 days arguing about, all these possibilities on extreme ends of the spectrum, and the estimate comes out right down the middle. So
exactly. That's exactly you argue over what the extremes are going to be. You argue over what your personal thoughts are versus their thoughts, and then when it came out at 2.7, it's like, okay, we're all on the same page. We've never seen a window this small as far as estimates go. I mean, there's been times there's 300 million pound difference between estimates, and we're all within very small trading windows. So I think everyone on the buying side, the selling side, is on the same page, and we really won't know any different until earliest as we start getting into a holding and shelling and we start seeing turnouts, but ultimately until January when the receipts are there.
yeah, once there's enough of the crop received, you can kind of get a full picture
Correct.
of California's crop receipts. So no, I think as far as grower feedback, I mean, I think it was very positive around that 2.7. Not that 2.7 is a number that's going to drive the market up 30, 40, 50 cents. But I think there was some relief that it wasn't something that was going to drop the market like we saw with last year's objective, just that it was a reasonable number and was in line with everybody else's estimate.
Yeah, like I said, this is the first year we've had such a tight window, and now that all the numbers are out there and they're all relatively close, I think it gives buyers the confidence, as you mentioned, that prices aren't going to drop 30 cents and they're paying too much today. But and on the sales side, we probably won't see prices run up 30 cents today, so we're in a good spot for buyers to buy and sellers to sell. When after the first independent estimates came out, we saw prices trickle up a few cents, 5 cents, and then once the subjective came out, prices went up another 2 to 3 cents on certain items, and now it's since leveled off. And I think everyone's kind of on the same page, and we have a fairly liquid market as far as pricing goes.
Yeah. Yeah, you mentioned the independent estimates, and I don't know if we talked about this on the previous podcast, but industry expectation prior to that was between 2.7 and 2.8, with a lot of the independent estimates coming out closer to that 2.65 number, was a little below expectation, so that caused a little price bump. So
But then the subjective coming out at 2.7, ultimately just backed up those numbers.
yeah,
So, and that's what a lot of guys are seeing in the fields on both sides, growers and the people doing the estimates. So as of now, it's pretty solid information.
yeah,
Time will tell, but as of now, it's pretty solid.
yeah. Based on what we're hearing, I mean, I don't see many disagreeing with it.
Yeah.
Everybody understands it's an estimate. I mean, the definition of an estimate is it's going to be wrong, but
Yeah.
it's not going to be, 300, 400 million pounds wrong.
Yeah.
So,
Definitely. So no, it's a good spot. This is a good benchmark for the rest of the 2025 crop and carry that momentum straight into the 2026 crop and rock and roll.
all right. Well, very good. No, sounds like we got a pretty good foundation right now, and the road ahead of us looks pretty bright. So,
Yeah, it's a good spot to be. I think the industry's in a good spot. We're at the higher levels that we've seen all last year, and then we're going to carry those hopefully over into next year and keep this thing going.
yeah, no, very good. And yeah, so what we have going forward, we can control what we control. That's sales, shipments, participation. Those are the things that'll help drive the market, help bring some price increases. So,
Yeah,
very good.
that's what we're good at
Yeah.
is selling and shipping.
Also looking into the new crop, I know we were discussing this in the office this morning. In-shell demand is looking pretty good for 2026 crop. That's something we haven't seen in a few years.
The 2026 crop in shell demand is very robust right now. Last year was a weird year with a lot of inventory that was left over. There's really no demand on the front end of the 2025 crop because of where Diwali fell. So it was just the fundamentals were completely backwards. But now we're back to a somewhat normal year that we've seen historically. So there is a lot of demand right now for new crop in shell. That'll keep product moving and hopefully keep pricing firm, and we can just ride that wave all the way into harvest and keep it going. Get it sold, get it packed, and get it shipped.
Yeah, no, I think that'll be a nice change. I mean, last few years, our nonpareil or independence varieties, as we brought those in, we've kind of put those on the back burner, not wanting to make in-shell early just because the price has been depressed. So, I mean, now there's some strong demand, kind of go back to a normal season. We'll have a busy August, get as much in-shell packed as you can, get
Yeah.
it sold. So,
Demand is strong. Pricing is now back at a premium, and it's good pricing from what we've seen over the last 18 months, and it's good to have that back.
Yeah.
It was kinda weird how things played out last year, but now we're back to somewhat. There's never normal in the almond industry, but
Yeah.
it's somewhat normal.
Yeah. Yeah, we talk about a normal year, but
There's no such thing.
I don't know really what that is.
No.
All right. Well, overall, I mean, position report, little lackluster, but that was kind of overshadowed by the subjective and kind of getting a good, reasonable number. So future looks bright.
Yeah, we're in a good spot and looking forward to see how this plays out, but it's good.
All right. Well, Kevin, thank you again for all the hard work, your travels, insight in the industry. So
Chase,
thank
thanks for
you.
having me on again.
You're very welcome. And thank you, folks, for watching. If you like what we're doing, please like, subscribe. This concludes another podcast. Thank you.
Thanks, guys.